Hello everyone, welcome to another video. In this video I want to answer the question of what am I doing in the stock market right now. So I just have a chart here and I'm going to go ahead and pull up the weekly performance. So this would have been this past week, as today is Saturday, and you can see that the stock market has been just continuing to slide, with the exception of oil, which is up 1.4% for the week, and it's up 60% year to date. You can see that everything else has just been really in the toilet. And of course, the three major indexes that you see, you have the Dow Jones or industrial average, you have the S&P 500, and then of course the NASDAQ, which is very tech heavy. With the NASDAQ being hit the hardest of all, but you'll remember during the pandemic, these stocks were high flying at that time. So I want to take a look here at the overall view of the NASDAQ, and this is taking us back a little over a year. And you can see really just some of the carnage that the market's been going through. So you can see that exactly a year ago, just see right around here, you can see that the stock market was at 13, we'll call it 13.9, 13.8. And you can see that it just continued up to 15.5, pulled back to about 14.5, and then bounced around in the high zone, right? And you can see this was, even without getting too technical, you can see that this was a level, right, of like consolidation here. So the market was kind of just hanging in this zone here. And then you can see it started this decline. And then we had a bounce here, and then we see the decline continuing with a small bounce here, and it looks like we're heading back lower. Again, without getting too technical on the stock market, just looking at these charts will give you a good idea of where the market very well may be heading. And in its simplest view, you're going to want to look or think about it this way, that as the stock market goes through, of course, it ebbs and flows, and you have higher highs being created, and that's usually indicative of the market moving higher. Okay. And then once you have lower lows being created, then that's indicative of the market moving lower. So I'm going to just use this example here. If I can get rid of this ad. Skip it just to get out of the way. All right, so you can see here the market, this was around the pandemic. So March of 2020, you see the market it just dumped here. But then you started to see that here, we started to see some higher highs, right? And then we'd come down, and you can see how strong the market was. So we had a higher high put in here. Yes, it came down here and set a low. Then you can see it did a little up and down here. And then you see that new higher high was set in, and then it continued. Same thing here. We had this high, came down here, back up here, came down here, but notice it wasn't a lower low, right? So it's still moving upward, and then bam, you see this higher high, and it continues. And we do the same thing here. It comes down, higher high, it continues. And then here, that's the piece we were looking at earlier. You see that consolidation there, market coming together. But then now all of a sudden you start to see this thing coming down. But you see here, it did come up. If you look at right there, it came up a little bit. But notice that it wasn't followed by anything moving this way, that it then broke down and made a lower low, right? So we see it coming down here. Then it came up here. We're getting excited. But then it came back down and made a lower low. So just by looking at the chart, there's nothing on here that says that right now is a good time to buy. If anything, the market it's been moving lower again all year. So that's kind of indicative of where we can expect it to go. And we know that it will turn around when we start to see some of these patterns returning, right? We start to see strength coming back. And instead of making lower lows where we get excited about a move up, just to be disappointed again, it would be the opposite. We'd start to see moves up, we'd get disappointed for a little bit, but then the move would continue to go up, right? So that's kind of what we're waiting for there. So just want to take a look here. Here we have just companies that people would be familiar with, for example, Netflix, and you can see what I was talking about, where pull up a weekly chart. You can see where we were moving on the up and feeling good about things. Even though Netflix was, yeah, actually it was though. See, came down, but then we're moving up, and then it had a rip up here. And then now you see it's like the exact opposite, right? And it's funny, there's a saying that is the stock market takes the stairs up, but then the elevator down. And I think that is definitely true. When the stock market's moving, you're stair stepping up. But when it comes down for that move down, it's definitely elevator. You get there a lot faster. All right, and then looking at Tesla, we see something similar. Now, Tesla, this company I'm just excited about. I'm a Tesla fan, definitely bullish or a fan. I believe it's going to be a win in the long term, as it's been so far over the last, I don't know, 10, 15 years, however long it's been trading. It's been just a total, let's see. It's been around, looks like over 10 years. So it's definitely a fan. But again, when you look at it in terms of market movement, you can see we had that upward movement here, then a thing, you know, the downward here, and then back up for a rip through. And it really has just been bouncing, has pretty decent swings actually. So people that are swing traders, I'm sure would like this stock because it's, I wouldn't say predictable, but you can see, right? Like if you're buying on the lower end, when it dumps, you can see where you almost could make significant percent return, right? And of course that works until it doesn't work. All right, so back to the question that I started with. What am I personally doing in the stock market? And the answer is I am doing nothing, not taking any new positions. All I'm doing is dollar cost averaging into an ETF at this time. So I have my two portfolios that I run on this channel, as well as another portfolio, which is actually down substantially. And that includes mostly individual stocks, right? So it's the individual stocks that make up the NASDAQ. And over the last month or so, I kind of switch modes because the individual stocks, there is so much, I don't say uncertainty, but we've seen so much red that I don't feel comfortable anymore purchasing more, shares of those companies. Until I start to see strength in the stock market, I'm going to go ahead and hold off. However, I do believe in being actively invested in the stock market. So I just switched over and I'm adding to what was really a small position of ETF in that larger account. I'm going to start average or dollar cost averaging into that ETF position. In other words, I'm going to be buying the QQQ, which is the NASDAQ ETF. And I'm going to just continue buying it, right? Because this one tracks the NASDAQ index. So that's what I'm doing in the stock market. I'm definitely not taking any new positions. I'm dollar cost averaging into individual stocks sparingly, especially tech stocks, just because I've seen them get, thrashed. And of course, it's not to say that the stocks won't go up. I believe, obviously, in the power of the stock market. I've been in it, a long time. I know that the stocks will go up. However, sometimes it pays off to be patient and wait until you see some strength in the stock market instead of trying to buy at random points. Finally, just to recap, I also know that staying invested in the market is something that's important. You can't get scared away because this is where some of the biggest gains come from when you're buying low, and then you have the ability to enjoy the gains when the stock market turns around. Okay, so I continue buying, averaging down or averaging into my positions on the QQQ ETF, and that's what I'm doing in the stock market. Please share your comments in the comment section. Be happy to listen and see what everybody else is doing. And as always, I thank you for your time. This is Dr. Diffins signing off. Bye-bye.